This is the MTPredictor weekly update for September 9th. Alright, we got a lot of stuff to get to today's update, but I want to kind of start with a little background of what's kind of going on, around the world here. We do have a Fed meeting that'll be on Thursday. I think this one's the announcement comes early at 12:30 Eastern. With the Fed forecast at 2 p.m. Eastern, and then I think the press conference after that at like 2:15 or something Eastern time. So that's coming up, and again, we've got this whole issue of, is there quantitative? Well, we know there's going to be QE3, quantitative easing is coming. I don't know that they'll ever be able to stop it at this point, given the where we are deficit and debt-wise. They banty about these numbers in the trillions. And we're kind of getting used to that number being, but the reality is we can't really comprehend the size of these dollars that they're talking about. When you talk about the trillions and trillions of dollars, not only just getting added to the debt, but the unfunded liabilities, your Social Security, your Medicare. These numbers are just astronomical, and so quantitative easing is something, it may be called differently down the road, but it's not going away. And I heard Jim Rogers saying he suspects that the Fed has already been QE3 has already been underway secretly, but anyway, whether that comes as an announcement on Thursday, who knows. But obviously it will impact our markets, and initially the reaction may be, as it has been with these QE announcements, a move higher for the markets. It doesn't mean the markets can't correct. We look at the daily the daily S&P here, and well, let's just kind of go back. You see we had our correction down here where we got our major buy signal with the professional buyers stepping in here, and a nice trade to the upside there. But the pattern down here as well, we had a nice 5-wave pattern down into the buy signal there, calling for a potential low there. Obviously that did play out. All right, now what tends to happen is, if this area, this decision point, this DP resistance area or target, if this, which is based off the wave 4 swing here, if that resistance or target area gets taken out to the upside, right, the tendency is that they will erase this whole 5-wave pattern down to the upside. So what we do is we look for wave 1 here, at the top of wave 1, we take our decision point, all right, and that gives us the next target. And obviously we've reached that on Friday. If we also look at the pattern going into this major resistance area, use our Elliott wave tool, and you can see we've come right into the minimum wave 5 target on the daily chart. So obviously a potential topping pattern, and again the tendency is a correction back to the wave 4 DP, which is this area. It's going to be right around 1388 in the ES, the current December contract. So that's where we are. We don't have any, we got a gray candle here on the close Friday, which means it's neutral. We don't have the sellers overcoming the buyers yet in the resistance area. Well, let's go to the weekly chart here, and a little bigger picture, and we see that the last move up here, again back here we had our decision point top with our correction, and then we came back and formed a new 5-wave pattern. So we're just closed above the minimum wave 5 resistance area there on the weekly chart. If I take a decision point off of the top of wave 3, this is another, we hit this decision point area. I was looking for this area. The last couple of weeks I've been telling you in the market update, I expected that we would go higher into this DP area. And this is a blue, what we call buyer's candle. So buyers are overcoming sellers at this point. We don't have any red sellers candle coming in here where that would tell us that the sellers are overcoming the buyers. And with this Fed meeting coming up, here's your next target area to the upside, this typical wave 5, which will come in around 1475 area. You've got a nice round number up there, 1500 in the ES, again the December contract. Uh, I'm sorry, this is the September. I said December, but this is the September contracts. We'll be rolling over those shortly here. But so what I'm basically saying is, with this Fed meeting ahead, I wouldn't look to be. What I would be looking to do is protect your long. If you've got 401k, if you've got pension, if you've got anything that's geared to make money when the market goes up, I would protect those positions. Whether you're using stops in your stock portfolio or puts as insurance against the downside, that kind of stuff. We're in an area that the market could potentially correct. We're in a time of year where that, we've seen that happen, corrections and crashes, between the September and November. So it would be prudent to take action as far as that goes. At the same time, more money printing the Dow could go to 5,000. Okay, most of the big money that I've heard are making bets on inflation in the future, bigger picture stuff, and so the Dow could go to 50,000, and if a loaf of bread costs $250, well, it doesn't really matter if the Dow's at 50,000. You're losing your purchasing power, even though with all the money printing, asset bubbles are going to be created. From we had our tech bubble, and then China purchasing our debt. We had a low interest rate environment when the bubble crashed in stocks. Everybody went into real estate. That created a bubble with the low interest rates. Now you've got China backing off on buying our debt, and the Fed is stepping in and buying our debt, and keeping the interest rates artificially low. And now we're seeing we're seeing the precious metals, the next cycle, if you will, money moving out of the real estate, from the real estate crash, in gold and silver, basically on a 10-year, 11-year bull run now. We'll look at those charts in a minute. So anyway, we've got all this stuff happening in the background, and I was just reading. They had one of these global economic conferences in Italy on, I think it was Friday, and all the leaders. There's some world leaders there. Your world top economists and so forth, like your Nouriel Roubini and these folks, all agreeing that if something is not done, that U.S. and Europe, even China, is looking at financial cliff. And in fact, Roubini had said that even if they do take steps, we're still headed for what he called years of gloom ahead. And so again, this background, even looking at China, one of the problems with China now China is growing by 7%, which would be great, except they've had the last 20 years double-digit growth, and so it's contracting down around 7%, and experts on China in that situation are concerned that you get that many people unemployed in China. You're talking millions of people, and that is the kind of stuff that revolutions are made of. So I mean, this is their words, not mine. So this is kind of the background. This is going to be a very, very interesting time, and this is why we see during periods like this where your commodities, your gold and silver, gold has been telling us for the last 10 years that inflation is coming, and like I said, this is where the big money is going. Obviously, your people like George Soros buying gold in his last report that he filed with the SEC, or at least his fund. I was listening to an interview with another billionaire investor, and he said he's betting on inflation from what they've seen. And so it's like I said, we may get these asset bubbles. because of the artificially low interest rates. You know, as I say, when rates are low, stocks will grow, and that may continue to happen. But behind that is the other problems are you get in with inflation. You know, when the Fed measures inflation and he takes the CPI, the Consumer Price Index, they take out food and energy. Well, if you go back historically, the two things that increased the most during inflation, in fact, they increased double the price of anything else, is food and energy. And those are the two things people need the most. Anyway, so it's time to maybe start positioning yourself to look at some of those things, and you know, make your decisions. And let's look at the chart. So we look at this. We see this is wave 5 up. So we have to be careful. Protect yourself. Protect your longs. Don't know yet that I would be looking. Like I said, a correction could come at any point here. If you know, QE is on Thursday is a disappointment. In other words, it's still on hold. You know, that could cause it. If it's announced that they're going to do it and here's the plan, you know, that may make the market take off. But this is too why you're seeing the market has been rising in the face of, you know, pretty mediocre economic data that's been coming out, showing that recovery is well, the economy is just, it's not recovering. All right, so enough of that. But again, I just wanted to kind of give you a little bit of the background of what's going on, in case you don't know anyway. Let's look at. Another thing I wanted to point out here. This is interesting. Here's your Greek stock market. This happens to be the daily chart here, and this may have you know, bottomed. You got some consolidation and a breakout now. In fact, Greece, you know, this day alone, which was I think the 7th of 6th of September here, the Greek stock market was up 6%. So even though our Dow was up, you know, a couple hundred points or whatever the other day, this market was up 6%, and it's breaking out. And so this market, which was pummeled, obviously, breaking out here, may potentially, you know, in some of these other European, you know, your Austria, your Belgium, Spain, Italy, you know, it's worth taking a look at those markets because they're kind of similar positions here. And you know, nobody's really talking about on the talking heads on your CNBC and some of these others, you know, here's a market up 6% in one day, and nobody mentions it. So I thought that was interesting. Let us take a look at where's our let's take a look at the, see if our euro is up here. All right, and let's take a look at the bigger picture here. So the euro, obviously, you know, sold off pretty hard here. Well, we went wave 5 down. We went into our typical wave 5 support area here. And again, we expect when we go wave 5 down, we get a correction back to this wave 4 decision point, which is going to be over here. You'll see it's on the chart here. So this is the area where we expect, if we wave 5 down here, which means the market in terms of Elliott wave potentially bottoming, at least a correction back to here is expected. And you can see where we closed on Friday. So pretty close to that target, which is sitting around 28.48, call it 28.50 anyway. Make it nice and round there. And so that is anticipated. Now, again, what happens is if this area holds as resistance, then the trend which was down prior should continue down. If they take this out to the upside, this resistance area out to the upside, then it's telling us that this whole 5-wave pattern down is going to get erased. You know, again, we'll take a decision point off of the top of wave, what would be wave 1 here, and I'll just extend this out a little bit. using the tools and the software here. Okay, and so if this area gets taken out here, this is probably the area we're going to see, just like we saw with the S&P. Again, these patterns are the same. It doesn't matter if we're looking at a daily or weekly charts of the Euro or the S&P, or if we're looking at 3-minute charts. They're all the same. So anyway, that's what I see there. In the Euro, if we want to look at the weekly chart, you can see a similar bottoming pattern. Here's the weekly chart. If we look at the Elliott wave pattern right into the typical wave 5 support here, correcting. Again, we're close to the daily resistance area. All right, here's the last swing down into the low, the wave 4 swing. We can take a decision point off of this from the weekly chart, and it gives you another area of resistance on the weekly chart, or another target if those wave 4 decision point areas get taken out, and that sits around 3690 area. All right, so, and that's the this is the 60, this is the Euro future. All right, so that's the Euro. Take a look at oil. Here's the weekly chart of oil. Again, we had basically a kind of a double bottom, almost a triple bottom there, and so oil rallying off of that. Again, this is in a, if we just look at the pattern here, in some resistance here. We got a little selling, a little some red sellers candles there. We had some sellers overcoming the buyers in this area. So this is an area they're going to have to see if they're going to be able to take this area out to the upside on the weekly chart. If it holds as resistance, then we should get a wave C leg down. Again, this is weekly chart, but we can project that. Oh, I got a down wave C start here. Okay, and put you back down. Again, weekly chart above 76 anyway. All right, but the daily chart here, again, nothing real clear, but you did have sell signal come in. Your 100% initial risk line there's 93.18. Don't think that's been achieved yet. A low of 94.08. And so we'll see if this, you see the target down there again around just below 78 anyway, at 77.56. You'll have some more support on this B swing, this decision point off of the B swing around 86. If they take this out to the upside, here's the last swing into the low here, so this is going to be a major target. If this area gets taken out, you're looking at above 110 to around 111 in oil. If they can take the wave C areas out to the upside here. So we'll see. It's kind of consolidating a bit here, last couple weeks anyway. And so that'll probably need to make a decision shortly. Now let's look at, I think I did have the chart for gold and silver, because we do want to take a look at those. All right, silver here, it's a 60-minute chart. Let's go to the daily chart. You can see, again, here was the consolidation. It was about 14 weeks or so of it. Came to a head, and we got the break there. So we're buying in here. I've been long silver for a lot longer, but I took the opportunity to buy more anyway on the break. And you can see silver closed out there at 33.69 there Friday. Strength on the STF, which is telling us, back here that there was going to be pressure to the upside, more upside ahead anyway, and took a decision point off of this last swing basically into this low. Gives us right at 34.30 would be the next, or beginning of the next resistance area there. So we'll look for that. And also just on the daily chart here, you've gone beyond the wave 3, extended wave 3 target here. If we want to project a wave 4 down where the you can expect support if we do get a pullback. Here it is. We're looking at around 3140 would be the top of the support area there. And all right, so I think that we'll wrap the analysis up there. Do have a couple things to point you to this week. Not what I wanted to show you. The Traders Exclusive Traders Workshop. I'll post the links on the website. I'll probably send this out in the email as well for this. So Monday, September 10th, the Ultimate Trading Workshop. You can register here. There's a number of speakers. The good thing is these each are about a half an hour each, so they're short, to the point, and my presentation will be at 1:30 Central Time to 2 o'clock. You can just click there to register. Again, I'll post those links in the email and on the website there. If you haven't already, you can get the MTPredictor free PDF, the Introduction to MTPredictor, and that's at mtpredictor.us. Just enter your name and email and click submit. You'll get the weekly market update and that free introduction to MTPredictor, and it'll show you how to trade MTPredictor using the standard trade setups that the software provides, and then some of the advanced concepts, the advanced trade setups. Also, it is our anniversary, 11th year anniversary for MTPredictor, so we are having our anniversary discount. We usually do this once a year where you can take 20% off our regular price of $19.95, and on all our product, our add-ons for NinjaTrader 7 and also our standalone version. So instead of paying the $19.95, you're going to pay $15.96. If you're interested in that, you can just shoot me an email, john@mtpredictor.us, and let me know you're interested, and I'll send you the discount links for that. All right, we'll leave it there, and check out that Fed meeting on Thursday. Should be maybe some fireworks there and give us a little more information on what to expect going forward. And we'll see you back here next week on Sunday evening.